In a top story, the rupee breached the 96 per dollar mark for the first time ever on Friday. And for the Indian currency, the larger headline is still global. There is no clarity on the US-Iran war or Hormuz, and as a result, Brent crude is climbing back towards $110 per barrel. The market uncertainty persists over the success of featured peace talks and the fact that the Strait of Hormuz remains effectively closed. For India, this is critical. Higher oil prices directly increase India's import bill, leading to higher dollar demand and a weaker rupee. Strong U.S. data with a twist has added another layer to the rupee story. Expectations of higher inflation and delayed rate cuts or even hikes in the U.S. has supported the dollar, which in turn adds pressure on the rupee. China is adding another layer to the rupee story. In many ways, China is positioning itself as a stable growth engine at a time when the rest of the world is dealing with uncertainty. And this makes China attractive for global investors. As more money flows into China, the yuan strengthens. At the same time, some of that capital shifts away from markets like India, reducing support for the rupee. And there's also a secondary impact. Stronger Chinese demand pushes global commodity prices higher. For India, this means a bigger import bill and higher dollar demand. Now, foreign investors are not helping either. Outflows of 19,152 crore rupees in early April, after 60,655 crore rupees in March, show a clear trend. When international investors pull money out, dollars are bought and rupees are sold, which weakens the currency. And in simple terms, less foreign money coming in means less support for the rupee, especially at a time when global pressures are already high. And to discuss more on this, we're now being joined by Amit Babri, the founder and MD of CR Forex, and he's joining us live from Mumbai. Thank you so much for joining us on the broadcast.
Pleasure is mine. Thank you.
Now, let me begin by asking you, will the rupee move towards 100 rupees per dollar in the coming months? Because that's what people are fearing now.
If you see the current situation, number of factors which are suggesting rupee to move 100 is much higher than number of factors which are suggesting that rupee might appreciate towards 94 kind of a level. But I think you will always solve a problem when you start acknowledging the problem. So probably Indian government and RBI both have acknowledged the problem that rupee is weakening at a higher pace as compared to other emerging market currencies. So we think that RBI and government will take steps, and because of those steps, rupee might not move towards 100 in near couple of months' time.
And that being said, of course, looking at the situation in West Asia, the Iran war and the Strait of Hormuz being shut for now, how vulnerable is the rupee if the Brent crude oil prices remain above $100 per barrel?
If we see India's key import items, there are three key import items for India. First is oil, second is electronic goods, and third is gold. In FY26, we have bought oil close to $130 billion with an average price of $80 per barrel. So if the prices stays above 100, approximately we can say that it is going to put pressure approximately by $30 to $40 billion per annum. So basically, if the oil price remains high, it is putting a lot of pressure on current account deficit.
Right.
And to the tune of $30 to $40 billion.
Right, and if at all there is a fear of the rupee moving towards, of course, 100 rupees per dollar, what do you think would be the measures taken by the RBI and the government so far?
What are the steps what government and RBI can take from now? So there can be a couple of measures. The first measure can be they can introduce FCNR bond or NRI bond, where the flows of money from western part of India to India can come, and the similar kind of movement they have done in 2013 also. That is the first step what they can do. Second step what they can do is that they can improve the taxation of FIIs on equity market and debt market. In last couple of months, FII have sold close to $22 billion in Indian equity and debt market. So any improvement with respect to taxation rule can increase the flow from the west to the east. Third important step, what they can take is curbing imports like gold and silver. Basically, they have taken steps towards curbing of gold and silver demand. Fourth step, what they can take, they can tell all government bodies like SBI or all government companies to borrow in foreign currencies, which can also reduce the pressure on rupee. And lastly, what step they can take? The last step is introduction of uh, reduction of limit of LRS scheme. So via all of this step, I think government and RBI is capable of managing the rupee. At the current juncture, we are seeing that 96 to 96 and a half will act as a strong resistance for rupee, and rupee will gradually move towards 94 and a half to 95 kind of a level. Saying that, whether we are expecting rupee to appreciate drastically, we are not expecting rupee to appreciate drastically. Why? Because in the RBI books, there is $77 billion RBI is short. So whenever the flow will come in, RBI will start absorbing the dollars. And the last point I will want to make as far as rupee is concerned, if you see dollar index is trading at a 16-year support, which is 98. If dollar index has broken, or if it breaks 98 kind of a level, then we will see a strong weakness in dollar index towards 94 kind of a level that will also support the rupee.
Now, also, that's interesting to see how, of course, number of steps, as you mentioned, as is being taken by India, that also includes this restriction of silver imports. Of course, we're going to see all the measures taking place. Thank you so much for joining us on the broadcast and giving your opinion on that. Appreciate it.
Pleasure is mine. Thank you.